Hi guys, it's Annika here with TipRanks, and today we're going to look at whether Peloton Interactive stock is a buy. Peloton Interactive is the largest fitness platform in the world, with a loyal community of 5.9 million members as of June 30th, 2021. They pioneered connected, technology-enabled fitness and the streaming of instructor-led boutique classes for their members anywhere. They have a vertically integrated platform for the best-in-class end-to-end experience and a direct-to-consumer multi-channel sales platform. They have around 123 showrooms as of June 30th, 2021, They have around 123 showrooms as of June 30th, 2021, which have highly knowledgeable sales specialists, high-touch delivery services, and amazing support teams for their members. Their revenue is mainly generated through their connected fitness products and their recurring subscription services. However, recently they missed their earnings expectations, and this caused the share price to fall 25% because of their wider than expected loss and their weakening sales growth. However, could this be an opportunity for investors to get involved? So let's look at the TipRanks platform to see what the price targets are. Before we jump into that, the ticker for Peloton Interactive is PTON. The current price for Peloton Interactive is $55.64, and it's deemed a moderate buy. However, the analyst price target is $93.04. This is a 67.22% upside from where we're at, based on 28 Wall Street analysts offering 12-month price targets. The TipRanks Smart Score is a 4 in that it is neutral in terms of outperforming the market. Remember, a Smart Score greater than 5 is that it's more likely to outperform the market, and a Smart Score less than 5 is that it is likely to underperform the market. However, despite this, analyst ratings were a moderate buy, and blogger opinions have also been bullish, with hedge fund activity increasing by 9.4 million shares just in the last quarter. Technicals, however, have been negative, and news sentiment has been bearish, as well as TipRanks investors also being negative. In Q4 2021, Peloton generated a revenue of $937 million, which was a 54% increase. The primary drivers leading to their revenue outperformance versus guidance were higher than expected bike deliveries and better than expected connected fitness churn. This was partially offset by a higher than anticipated Tread and Tread Plus return rate. They made significant progress on product wait times, with Bike and Bike Plus order to delivery windows at pre-pandemic levels for the past several weeks. They also added around 250 net connected fitness subscriptions in the quarter, bringing their end quarter connected fitness membership base to 2.3 million, up 114% year over year. This was actually ahead of expectations, reflecting strong Bike and Bike Plus demand, as well as better than expected gross additions. And also, as of June 30th, they had 874,000 digital subscribers, which represents 176% year-over-year growth. This was a decline, however, from the previous quarter, which mostly reflects because of the seasonality of their digital business, which is more pronounced than for connected fitness. Gross margin for the quarter was 27.1%, which came below their expectations. This was entirely due to their connected fitness product segment, which had a gross margin of 11.6%, which was below their 21% guidance. They also had higher than anticipated logistics and warehousing costs, which ended up rounding out the balance of the shortfall in connected fitness margin versus expectations. Subscription gross margin was 63.3%, and subscription contribution margin was 69.3%. This was modestly ahead of expectations as they continue to leverage fixed costs associated with content production. They do, however, have a goal for a subscription contribution margin target above 70%. And turning to their operating expenses, their total operating expense as a percent of revenue was 59.3%, which was a lot higher compared to 32.7% in Q4 of last year. Operating expense deleverage was driven because of their planned shift to marketing spend from Q3 to Q4, lower revenue due to recall impact in the quarter, and the impact of adding Precor to their financials. Sales and marketing expense was 24.5% of total revenue versus the prior year period of 13.9%. They actually had ramped up marketing in Q4 given their improved order to delivery windows. General and administrative expenses were also up to 24.8% of total revenue versus 14.2% in the prior year. The Peloton business grew significantly in the fiscal year of 2021. They had made lots of investments across member support, financial systems, and other different functions so that the organization could scale effectively and grow the business. And with their member experience in North Star, these investments will help them continue to improve their end-to-end member touchpoints. Could these expectations that have been missed be only temporary as they increase their costs and their investments back into the business? Especially as their R&D expense had increased to be 10% of total revenue versus 4.7% in the year ago period. Most of their growth in 2021 could be reflected in these increases in share prices. However, this dip could be an attractive entry point for investors who missed out on these share price increases. So looking at the risk factors of Peloton Interactive, the main risks are in finance and corporate, with 40% of the risk primarily focused in that segment, 18% in production and 50% in the ability to sell. The website traffic function on TipRanks allows you to plot the website traffic on the green line and the stock price with the orange line. And as you can see, they're quite correlated. The recent decrease in the share price has also been followed by a decrease in website traffic. Now, it can be very reassuring to see that hedge fund trading activity has increased. Hedge fund confidence signal, which signifies a unique signal which shows hedge fund sentiment according to recent transactions, you can see that it is very positive and many have bought based on the activity of 12 hedge funds in the recent quarter. Looking just below, we can see the hedge fund activity, with many having added to their portfolio very recently. Blogger opinions are quite conflicted, but on the most part, they are bullish. Some of the bearish sentiments are 3 red flags for dip buyers and how the Peloton stock backpedals 35% and whether there's any value here. Whereas some of the bullish ones are stating that Peloton is one of the 3 stocks ready to bounce back, some people's favorite stocks, and the potential 17% upside, which is actually less than the 67% upside based on TipRanks' upside price target. Much of what will happen with the Peloton share price will be dependent on the 2022 earnings. Chief Executive Officer John Foley said in a letter to shareholders, "We anticipated fiscal 2022 would be a very challenging year to forecast given unusual year-ago comparisons, demand uncertainty amidst reopening economies, and widely reported supply chain constraints and commodity cost pressures." Now, a lot of the expectations of the share price for Peloton Interactive increasing will depend on whether they meet their 2022 guidance. They have seen some uncertainty given what's happening in the current economic climate, but only some time will tell. Is this a dip that you think is a good time to buy into? Are you guys holding Peloton Interactive, or are you guys staying away? Leave your thoughts in the comments below. And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. Remember, none of this is financial advice. I'll see you guys in the next video. Bye!